James Seyfert. He is a CFA. He is an ETF analyst at Bloomberg. We reached out to him. He's joining us. We're going to break down all the ETF news. Another one got approved today, BlackRock. So without further ado, let's go ahead and patch him in. Hey, James, how you doing?
How's it going, guys?
Hey,
Good. How are you doing?
I'm good. I
Can you hear
can't
me?
imagine the demand that you're in right now with all this ETF news. So I wanted to thank you so much for taking time to visit us. I'm David. The other gentleman that's got the Sin City name behind him is Robin. And then we have our friend Forrest joining us as well. James, what was your, and I want to ask you really quick, because you've been at Bloomberg for a while. I believe it was 9 years. I looked on LinkedIn. I'm assuming you started in the TradFi and kind of made your way into the crypto world. What kind of got you there, and why crypto, and why did you continue to stay through all the FUD and everything that we've been hearing in the news?
So depends how long we want to go down this rabbit hole, but really it started when I was in college. My freshman year, which was spring of 2011. I said this on another podcast the other day, but I had a suite mate who was mining Bitcoin in the spring of 2011 and convinced me to download the Bitcoin mining software onto my laptop. I had no interest in it. I'm pretty sure he was using it for Silk Road type purposes. So he might have lost his Bitcoin when Silk Road got seized. I'm not really sure. But basically, he put the mining software on my computer and was like, I basically said he could keep it and just give me some of it, maybe if I ever had any interest. But my computer blew up. That hard drive blew up like a few weeks later. So that was my first interest in it. But I actually got slightly orange pilled by Kathy Wood, who runs the ARK investment products. And they're actually one of the companies in partnership with another company in Europe, 21 Shares. So 21 Shares is based in Europe. They already have a whole bunch of crypto ETFs, ETPs trading in Europe, and they partner with ARK here to try to launch a spot Bitcoin ETF. So they're involved in this whole race. But back in the fall of 2016, I was at a TradFi, traditional finance conference with Morningstar, and she was up on stage sharing her white paper with Bitcoin. And I was like, oh, this is that same stuff from when I was in college. So basically, she's the one that orange pilled me. I went down that rabbit hole. I eventually moved over to Bloomberg Intelligence, where I write research, and I reported to Mike McGlone, who's our commodity strategist, and he writes a lot about crypto now. But in 2017, he didn't do any of it. And he asked me if I knew anything, and I was like, I actually do. Over the last year, I've gotten very into it, and so that's my rabbit hole experience of how I got into crypto. And now I'm a full-time ETF analyst, but that experience covering crypto from the commodities angle and macro angle in combination with my ETF experience is like putting this current situation about as right in the middle of that Venn diagram as you could possibly imagine.
And that's great because we're essentially bringing together the world of TradFi and the world of crypto when it's all going to be one, right? We're going to have companies running on blockchain. We're going to see more ETFs. Now, speaking of ETFs, what data have you on? So the SEC, they just approved another ETF. So I'm going to share a tweet from someone you do your show with, Eric Balkunas. Said the 2x Bitcoin ETF has become effective. Scheduled to launch Tuesday. It was doubtful it would happen, but it looks like it's official. Could this be early sign of SEC lightening up? After BITO launch, I believe they made earlier 2x filers withdraw. And then you tweeted this as well. Another potentially small crumb signifying the SEC is lightening up to their adversarial stance towards Bitcoin. Break down what you tweeted about this. Are you surprised that this was approved? And is this like a foregone conclusion now that the BlackRock spot ETF is going to get approved?
So first, not a foregone conclusion. Definitely not a foregone conclusion because they approved futures ETFs and they did nothing but deny spot Bitcoin ETF after spot Bitcoin ETF. So not a foregone conclusion, but I think it definitely makes the case a little bit stronger. You saw up there, I posted actually a piece of my note, which is technically supposed to be behind a Bloomberg firewall, but I wrote that the last week. So the day after we saw the iShares filing I wrote that, and I basically said, I have to believe if they're going to allow this 2x Bitcoin ETF to launch, they're like, if they don't, they're absolute hypocrisy in allowing a 2x leverage futures Bitcoin ETF to launch and then deny a spot Bitcoin ETF is just insane. So it definitely signifies a little bit more that maybe the SEC is loose lightening up here, as I and Eric both tweeted. But I wouldn't say it's like a smoking gun that the SEC is going to approve this, but it's definitely giving me a little more confidence in thinking that the approval might happen.
For me, I look at it as almost like a risk appetite. And so what they've always hung their hat on when it comes to the spot Bitcoin ETF is the fact that, hey, there's volatility, market manipulation, and we don't want to take that risk or put risk on on investors, and so then they raise that investor protection flag, and here you have so some risk, at least more so than the futures by offering leverage trading on on the Bitcoin. So I don't know. I think it's a pretty good indicator of a changing of sentiment, at least from my perspective.
Now, James, we did start a little conversation on Twitter. That's kind of how you arrived here, and I want to share that. And I want to share a comment I made. So we talked about the Valkyrie when they filed for the spot ETF, and when you and Eric were on, I believe it was Anthony Pompliano's podcast. I believe one of you said, once BlackRock files, everyone else is going to file in, and they're going to start filing, and that is literally what has happened. And so we tweeted, I said, do you think the NASDAQ partnership to target market manipulation in the BlackRock application is enough to get them the approval? To which you said it's too complicated to put in one tweet. Can you maybe expand on why that is enough, why that isn't enough? Can the SEC point at that and say that is the reason we're approving BlackRock?
So there's two ways here, right? Gary Gensler and the SEC can be as rigid as they want and argue that Coinbase does not make up a significant enough market share of the Bitcoin trading, right? If they really want to do that, they can do that. But if they're looking for a way to back down a bit, if they just don't want to keep fighting this anymore, they could theoretically argue that Coinbase is a market of significant size, specifically U.S. dollar trading, U.S. dollar exchanges. There's many ways they can do this. And they've done this in the past when they approved the CME futures ETF. So one thing, you said the BitX was approved. There's two different ways to get ETFs approved, right? So the BitX, which is the 2X leverage ETF we were talking about, and the first Bitcoin futures ETFs are what's known as 1940 Act ETFs. And that process changed in like 2019. So essentially you file, and then after 75 days, you go effective, which is why Eric used that language, has gone effective, not approved. Because basically what happens, the SEC would have to come in and tell you to withdraw or tell you it's not allowed, which they did with Ethereum futures ETFs like earlier this month or late last month. So they didn't do that with BitX. So it's a de facto approval, but it's not the SEC is writing, we approve of this situation, right? They just haven't forced you to withdraw it. Now, 33 Act ETFs, which is what all spot Bitcoin ETFs are going to be, and what a few spot futures ETFs, not spot futures, what a few futures ETFs are, they got approved in the spring of 2022. Those are the Teucrium Hashdex ETF. So Hashdex launched one. Teucrium filed it, and Hashdex is another issuer that partnered with them to take over that approval. And then Valkyrie actually got an approval for a 33 Act futures ETF as well. They just haven't launched it. But in that approval process, I talked about depends on how rigid the SEC wants to be. Basically, they had approved those 40 Act futures ETFs, and then in order to approve this, so those 33 Act ETFs that go through this other process called the 19B4, and that is the process where the SEC either denies or approves and gives reasoning for all the denial or approval, right? So in the approval of those 33 Act futures ETFs, they said we're approving this basically because the CME futures market is a market of significant size, and I quote, with respect to the CME futures market. So basically, it's a market of significant size when compared to itself, because that's the only market they were looking at. So there are ways, I understand somewhat the logic there, but it's not a market of significant size in Bitcoin trading globally. They're just saying it's a market of CME futures, which is also, we could talk about any other number of exchanges that have futures on them. They just didn't consider them for determining what market they want to compare it against. So if you want to use, we're assuming Coinbase is the spot exchange that they have the surveillance sharing agreement with, which SEC has denied so many ETFs, and every single one, they said they want a regulated market of significant size. So basically an exchange to come in and register, which isn't possible right now under the current framework. It's why Coinbase and Binance are getting facing a lawsuit right now. Or they want surveillance sharing agreements, which means you basically just share trade data with the exchange that the ETF would be listing on, which is what the BlackRock filing says it has.
Now, enter EDX. Can that? What are your thoughts on that? Is this coincidence? I turn into a tinfoil hat guy sometimes.
I think that the SEC is trying to favor legacy finance to be the de facto exchange, and it seems like they're pushing out all the traditional crypto exchanges, and now they're trying to corner that market through ETF or BlackRock, also Fidelities with the EDX. I don't know. That's the vibe I'm getting. I mean, I guess it's somewhat conspiracy theory, but I don't know. I mean, that's what I'm reading. I don't know.
Yeah, I mean, that's definitely the vibe that everyone should be getting right now. But also, I would argue that, I mean, look at what happened with FTX and Voyager and any
Yeah.
countless number of other things. We can talk about the issues with the upstarts in the space. It basically, crypto as an ecosystem has punched itself in the face more times than anyone can count, and that's saying as somebody who's a Bitcoiner and crypto believer. So as far as the SEC is concerned, they already know and trust these financial institutions, so it makes sense that they would prefer them. Fidelity, obviously EDX is big, but I don't think that, I mean, the argument would be that maybe these things are getting approved and they're happening, and these TradFi companies, Fidelity, BlackRock, they have I don't want to say a revolving door, but it's basically a revolving door between the SEC and other parts of the government. Like, these people tend to go back and forth between these large firms. So they have their ear to the ground. They know what the pulse of where things are going. So then again, Fidelity has never stopped building, even during everything that has blown up. Fidelity continued to hire people, continued to expand. We've seen left and right people like they have always had interest. Franklin Templeton's another TradFi company that has shown a lot of interest in the space. So yeah, it's partially the tinfoil hat stuff kind of makes sense, but also at the same time, it also makes sense why a regulator would prefer these legacy institutions to be doing this. So I just think it might signal a little bit more of like an opening or a leniency from the SEC, specifically with Bitcoin type stuff.
Yeah.
If this was an Ethereum spot ETF proposal or ADA or anything you can name, or any of the ones that are named in the Binance and Coinbase lawsuits, like, we wouldn't be having this conversation. Right. Bitcoin is a unique situation on its own because it's the one thing that Gary Gensler will admit is not a security. Even if he's admitted Ethereum wasn't a security in the past, he won't admit it now. But Bitcoin is one that they're not fighting on. So I think maybe there's just a little bit of leniency coming in here because they're like, why are we fighting the Bitcoin aspect of this? We should just be fighting all the other things that honestly do make a little more sense. I disagree with a lot of the SEC stance on some of these things, but at least the argument is there, and the argument makes sense that they're trying to make.
So you don't think they're going to try to rewind the Bitcoin narrative and in the same way that they rewound the Ethereum one? And the reason I even mentioned that is that even though Bitcoin hasn't been in the crosshairs, Gary Gensler is still reluctant to say the words Bitcoin is a commodity. He just kind of shrugs it off like, yeah, okay, Bitcoin, but that's not what we're talking about here. And it always kind of leaves this lingering doubt, like, is this real? Like, I don't know. I mean, is there any chance that they try to go after Bitcoin? I think that maybe because there's proposal changes that could come down the pipeline, maybe they're being hesitant on just outright naming it a commodity and it's green light. I don't know. What do you think?
I mean, let's be clear. The left wing of the Democratic Party does not like Bitcoin. So assuming they win again and get more power some way, theoretically, they could really push some of this. But I really don't think so. I mean, there's enough that's been stated from all types of regulatory institutions and big players that they don't consider Bitcoin to be a security. So I don't know what would change. It sounds like Gensler might be arguing that Ethereum going to a proof of stake could be a form of a security move. Like, that might be, he might argue that's why he changed his stance. So I don't see Bitcoin doing that. So I wouldn't put anything past the government. If they really want to fight crypto, they can. If they want to really fight, they are actually. If they really want to fight Bitcoin, I wouldn't say the odds are like 0%, but I would say it's pretty unlikely that I would see them changing that type of thing, saying that Bitcoin is a security now.
You know, Bitcoin has proven to be more bipartisan than a lot of things, and even though there are more, people on the left, the Democrats that are more outspoken against crypto and Bitcoin, you do have some as well who are supporters. James, I want to bring up you were on a podcast, I forget which one it was, and you brought up the first futures ETF that was approved. I forget which one it was. It was either Valkyrie, but it did $1 billion. In what, a day? You said a day or a couple of days?
Billion and a half in 2 days. It was the ProShares ETF. $1.5 billion
in 2 days. What do you think if and I know there's one spot application in front of BlackRock, correct? It's Kathy Wood's ARK?
Yes, it is. The
If
same woman
what
that orange pilled me,
orange
and
pilled you,
you could argue, yeah.
things come full circle, right? What would you expect the volume? I mean, would you expect it to be similar, less? And what kind of impact would that have on market sentiment and maybe the price of Bitcoin if you feel comfortable speculating on that?
I cannot speculate on the price of Bitcoin, unfortunately. Literally not allowed to in my role.
Are you registered with
But it
FINRA?
would definitely, yeah. No,
Yeah.
I'm not. But
Oh,
yeah. So
okay.
I'm just my role at Bloomberg. They don't let me talk about price or anything like
Fair
that. But it
enough.
would undoubtedly be money pouring in. I mean, even if you take anything out of flows, right? The SEC approving this and being accepting to launch to allow a Bitcoin ETF to launch is undoubtedly a bullish indicator for how they are going to be going forward towards Bitcoin. Like it's a de facto acceptance. Now, will
Mhm.
it be 1.5 billion in 2 days? I think that's possible. I wouldn't count against that, and that would be spot Bitcoin buying. But also, you got to remember when that thing launched, October of 2021. If I mean, you guys can tell me, you remember what was going on with the market at that point in the late fall of
All time
2021.
highs.
Yeah, I mean,
All
we were
time highs.
rocking and rolling. It was a bull market of all bull markets, right? We were up
Yep.
above 60 in Bitcoin. Everything was at all-time highs. So to then getting an ETF launched at that point is like that basically marked the top, right?
Mm.
So right now we're not in the same sort of market cycle. We're not at all-time highs. We're not anywhere near all-time highs right now. We're not the halvening isn't really. We're just in a different cycle period from Bitcoin. So that might hinder things. But the other side of this is there's a lot of money in Bitcoin ETFs in Canada that left probably from GBTC when the Bitcoin ETFs in Canada launched. So they had spot Bitcoin ETFs before we even had futures ETFs. So like money probably went there from GBTC. So it's possible that if we get a spot Bitcoin ETF here, money could come back. Same thing, money could leave BITO because a spot Bitcoin ETF would be a more efficient market exposure than the futures ETF, in my opinion. So there might be some money in BITO that would come over to um, this new spot Bitcoin ETF launch if it does happen, which again is not guaranteed under any circumstance. But so new money coming in, but also there's likely to be money moving around from elsewhere that people just want to prefer a US based Bitcoin ETF just because it's likely to be the most efficient, liquid, tight trading, you name it, and secure place to buy Bitcoin if you're going to do it on the traditional financial rails. So there will be demand. How much of it will be completely new demand for buying Bitcoin itself? I don't really know, but there will be some of that, I'm sure.
And then I'm curious, do you anticipate that there will be some arbitrage opportunities where the price of the ETF and the underlying asset price of Bitcoin deviates? 'Cause from my understanding, and I'm no expert in it, but I think that they are not bought and sold the underlying asset in real time, and that they have to kind of settle up at the end of the month. Is that correct? Is there going to be an opportunity for where the price is higher here versus the crypto exchanges? What does that look like if there's any arbitrage opportunities?
So for the average person, there will not be any arbitrage opportunity. So the U.S. financial markets, the trading markets, we're talking about Virtu, Citadel, the largest trading firms in the world will be trading this thing. So if there's any arbitrage opportunity, it's going to be taken in like measured in nanoseconds, right? We're not, it's not going to be like when Japan was trading at a much higher multiple or South Korea was trading way higher than the U.S. markets, right? A Bitcoin ETF and the ETF wrapper itself is like a very advanced technology. So the way it works is if at any point there's always continuous creation redemption. So I mentioned Grayscale once or twice, but like the Grayscale Bitcoin Trust is trading a massive discount because there's no way to get access to the underlying value of that Bitcoin, right? So the way an
Mhm.
ETF works is you can always change the number of shares that are outstanding by hand delivering the underlying assets. So for a typical ETF, it's a basket of equities, right? Or it could be a basket of bonds. In this case, it will be literally Bitcoin. When you think about it, like what drives the price of a stock? It's the demand for its shares, right? The supply stays roughly the same. Roughly, I know there's a lot of other things that happen, but with an ETF, that can change intraday and all day long. So they'll just change the number of shares to meet the demand, and that means that price and NAV stays the same. So unfortunately, if somebody out there is looking, thinking it's going to be an arbitrage opportunity, it's going to be a very hard nut to crack. Usually, we call it the arbitrage band. So usually the price stays in line within a certain band, plus or minus like a couple bips or something like that, depending on how much it costs to trade and create the shares. So there's friction, obviously. You would have to send Bitcoin over the Bitcoin rails. So there would be some time, but like every ETF has its own thing depending on what it costs to trade. So like trading in emerging markets equity might cost that band may be a little wider than something like large cap US stocks. So we don't know what the Bitcoin would be, but for the most part, we can look at Bitcoin, spot Bitcoin ETFs in Canada and elsewhere in Europe, and those things trade absurdly tight. They are very efficient.
James, just a simple fact. You said nanoseconds. I used to trade stock options, and my cousin was a day trader, and he would talk about high frequency trading, and how literally these bots or these systems would come in. You would put in, let's say the stock was a penny, or let's say the stock was $100 and 1 penny. By the time you go and execute your trade, you're buying it at $100 and 3 pennies, and someone just made 2 pennies. Multiply that by millions. I can only imagine, extrapolating that out to the spot ETF and just Bitcoin in general, what that's going to look like. Any of you gentlemen, Forrest or Robin, anyone have anything else for James before we let him go?
Yeah, I've got a couple questions. I know it's probably quite difficult, but if you had to quantify it in terms of your confidence of an approval, what percentage chance do you think we're going to get an approval? Like if you just had to throw a number out there, like just gut instinct.
So me and my boss, Eric Balchunas, have publicly stated that we're probably around 50-50. I'm writing a note right now, and I'm going to be putting research, and I'll put it out probably next week where our actual numbers are. Like, I feel like 50-50 is a bit of a cop-out, but really it is, because we've talked about all the reasons why the SEC could approve. But also you got to remember, like there's been 33 applications for spot crypto ETFs in the US. They've all been denied. Every single one of them has been denied or not allowed to launch. Same thing, and then you add in like 30 or 40 other futures ETFs before we actually got the futures ETF, and now we're getting a leverage one. So a lot of leverage ones were denied. So like the SEC denying these things has to be taken into consideration, but I'm around 50-50. And to be clear, that number, on me saying 50-50, I've talked to other ETF analysts and other people who cover the more TradFi side of this stuff. They think me and Eric are pretty high on that, but we were also very high on the Bitcoin futures ETFs. We were the ones that were saying they were going to launch. And I can't tell you how many people were arguing with me that we were wrong, and we ended up being right. So I'm seeing a little bit of deja vu there, but we're not quite as confident as right now as we were with those futures ETFs that launched in the fall of 2021. We came out aggressive in September saying they were going to get launched. And that's literally when I got like a huge chunk of my following on Twitter, which is where you guys saw me. But I think it's probably 50-50, maybe slightly over 50-50, I would say. But I'm also trying to make sure I'm not just getting too hyped up. There's a lot of hype going on right now from all these different things. But this, the BitX, which is the 2x leverage ETF, also going effective today, which I wrote about over a week ago, was basically saying the SEC can't approve this and then deny spot. Also gives me a little more confidence. So every day I keep getting a little bit more. But again, at the end of the day, the SEC is suing Coinbase. They will be the custodian of Bitcoin. And they're the spot exchange that they're doing likely the surveillance sharing agreement with that would satisfy the SEC concerns. So the SEC could be like, no, we're suing them. We don't trust them at any point, right? So there's any reasons. It all comes down to Gary and the SEC and how flexible or rigid they want to be, which is what happens. We got the futures ETF the call correct, because we listened to what Gary was saying. Gary basically said he looks forward to CME futures Bitcoin ETFs applied under the 40 Act. And basically everything else before that signified they are never launching Bitcoin futures ETFs. But he had said a few things in a few speeches that gave us some hope. There's a lot of little breadcrumbs we're seeing right now that are giving us hope, but we haven't seen anything like Gary Gensler giving a speech saying we're going to loosen up our criticism of the Bitcoin market. But so, yeah, to answer your question succinctly, 50-50, but I'm trying to explain why that's not really a cop-out right here, because I hate doing that. But
and then last question that I've got is, do you think that BlackRock is seeing a little bit of demand in the market, or seeing the demand that there is for Bitcoin, and just putting out an ETF as a way to satisfy that demand? Or do you think that they see Bitcoin as a major opportunity that they can go out and really, really push into their client base as a way to diversify and round out your portfolio into Bitcoin as a digital gold thing? Do they view it as something that they can just really, really start pushing? Or do you think it's just, hey, this Bitcoin thing is getting a lot of demand, the halving's coming up, why don't we just throw an ETF out there just so we're making money off of it?
I think it's probably a little bit of all of those things, right? Like I have people in my company who do not believe at all in Bitcoin and still cover the space a little bit. So I'm sure BlackRock has the same thing, and they're just like, I don't care about this, but obviously we have clients who have demand. They've already had a partnership with Coinbase, so I'm sure they're seeing some clients show demand for this. Whether or not they fully believe in it, I feel like doesn't really matter. We talked a little bit about BitO and being how much money it took in just 2 days. That's because it was the first mover advantage, right? It launched just a couple days before Valkyrie got their ETF out, and they are the ones that took all of the money. They'd have most vast, I think it's 93% of the assets and make up 98% of the trading volume for Bitcoin futures ETFs in the US. So that first mover advantage is massive. So if BlackRock thinks they can get the first mover advantage here, even if they aren't certain that they're going to get approved, like the benefit of being first to market is tremendous, as evidenced by Bitcoin futures ETFs in the US. And if you look at spot Bitcoin ETFs in Canada, the same thing happened. Purpose launched BTCC first, and they took over a huge chunk of the market share in the space virtually immediately. So the benefit of just launching these things, even if you don't believe in Bitcoin, is there. And then, yeah, I'm sure there's some people that believe all the stuff that show the diversification and benefits to Sharpe ratio of adding a 3 to 5% allocation to Bitcoin at the very low end. The benefits that it has to your portfolio returns is probably something they might have looked at. But at the end of the day, it's just that there's demand here. They see the demand. And honestly, if you had asked me months ago if BlackRock was going to file for spot Bitcoin ETFs, we've had this conversation. Me and Eric both agreed that they would eventually. They have a gold ETF. They don't shy away from this type of stuff. A company like Vanguard would never launch something like this, but we always thought BlackRock would ultimately do it. I just didn't think they would try to be the first to market. Typically, what they'll do is they'll let somebody else do it, and then they just come in with their name, their prowess, and their distribution and compete with anyone, even if they're not first. So if you have the BlackRock name and you're first, that's a big thing for them.
Interesting.
I wanted to ask one last question. So we've had this ongoing narrative with the ETF that publicly traded companies or large institutions that were kind of fearful of SEC going after companies for being in crypto. Is this like a foolproof kind of path for a company to get exposure to Bitcoin and crypto without the fear of getting sued by the SEC? And obviously it's a little easier to, you don't have to do the whole seed phrase and custody thing. Is it pretty much foolproof now? If the ETF passes for a company to say, hey, we want to put some of our treasury assets in Bitcoin, do you see any potential downside?
So treasury assets, I don't know if you can buy a fund with treasury assets, but obviously MicroStrategy has bought Bitcoin itself, so I'm assuming you could probably figure out a way to do it. But I think the bigger thing here is advisors, not necessarily companies. So advisors make up, call it $30 trillion in the US, right? So you have $30 trillion in AUM. So if an ETF is approved, that puts Bitcoin on the traditional financial rails in the same way that Grayscale's Bitcoin Trust did back in 2015, 2016 time range. And we saw how much money poured into that. That thing at its peak had $40 billion in it, right? And that was mostly people looking for access to Bitcoin on the traditional financial rails. And a lot of it, I have to admit, was people trying to take advantage of those premiums and discounts. So they didn't actually care about Bitcoin. They just wanted to play the premium and discount. That said, going back to the advisors, if they have $30 trillion in assets, right? If just 1% of advisors decide to put 1% of their client assets into Bitcoin, that's an awful lot of buying. And there's a lot of systems out there that have been created in companies to try and make it easier for advisors to put their client assets directly into Bitcoin. But for the most part, based on surveys, a lot of people were just buying Bitcoin themselves. Advisors would much prefer that to be in their wheelhouse, right? So the way advisors mostly make money, it's AUM based. So they'll charge 1% fee on the total AUM or like whatever they're managing for somebody. So if somebody has $2 million, they're going to charge them 1% a year. So that's however much money. And if they have a bunch of Bitcoin and crypto in their ecosystem, but for this one, we're just talking about Bitcoin. If they have $50,000 worth of Bitcoin or $100,000 worth of Bitcoin, or they want exposure to Bitcoin, an advisor would much rather just be able to point and click in their traditional systems they already have than sign up for this whole new system. Some other company is promising to do X, Y, or Z. It's much easier for them just to be at Schwab or TD Ameritrade or Fidelity, when we talk about EDX a little bit, and just like add it to their systems that way. And then anyone not at those places, an ETF is still easy because you can buy any ETF with a brokerage account. So for all those reasons, I agree with everything you're saying. The other side of it is other funds have no way to really buy Bitcoin. The way they've been doing it right now is by buying BitO. There was Kathy Wood is known for buying GPTC. There's plenty of other mutual funds that have done this in the past because technically they're not allowed to buy Bitcoin directly. So if this ETF launches, all of a sudden other funds can use this ETF to get access to Bitcoin directly.
I think you hit the nail right on the head, James. Ease of use, right? Practicality. Instead of having to go open up an account or custody amount, I was like, okay, I got a Schwab account, I got a TD Ameritrade account. I already know who BlackRock is. I feel comfortable with them. Bam, click, buy Bitcoin. Now, I want to squeeze one more. I know you got to go. I just really quick.
It's okay.
Timeline.
Yeah, go ahead.
Timeline. So I know the SEC is the number 240 days or 270 on the max side to approve or deny.
Okay. So I have time. I can talk for a little bit more.
Okay, good.
Mine's an internal meeting that I have to go to, so they can wait a few minutes because this is going to take time, and I don't want to like shortchange you on the answer.
It's good content, man. So we appreciate it. Yeah.
Yeah. So the BitX, the 2X one is filed under that 1940 Act product, right? And the way that one works is it's just a 75 day from the day that it's filed. 75 days after that, it goes effective, and then you can launch. BitX is going effective on June 26th. And they have enforced the withdrawal. It'd be extremely rare for the SEC to come in and withdraw it now. And it looks like what you saw Eric post was that it fully went effective as far as the SEC is concerned. Mm-hmm. Now, the other thing is these 1933 Act ETFs, which I talked about the 19B4 process. That's basically just filing for a rule change. So it's an issuer partners with an exchange, in this case, NASDAQ or for BlackRock, or CBOE or New York Stock Exchange. They partner together to file to the SEC to propose a rule change. In this case, the fundamental thing here, they're trying to allow spot Bitcoin ETFs. There's underlying things, but the real thing here is they're applying for a rule change to be allowed to launch a Bitcoin ETF. Now I have that out of the way. The way it usually works is so you file and you go on to, we can see it on those exchanges' websites. So we saw it on NASDAQ, we saw the filing on NYSE and CBOE. NASDAQ and BlackRock were first. They're the only one with the stated market surveillance agreements or surveillance sharing agreement in their 19B4 process. So that's the one thing that separates BlackRock from the others. That said, once it posts on the website, we don't know. There's a time period that goes on between where the SEC has to acknowledge it. So the SEC basically has to say, like, we've acknowledged this and we post it on our website. And then after some period of time after it's on the website, it goes to what's referred to as the Federal Register. So once that gets posted on the SEC website and they acknowledge the application, then we have a concrete time frame. So when we have that concrete time frame, it goes from when it's posted, there's a 45-day time period before the SEC has to issue a decision. And they can delay, deny, or approve. And then again, another 45-day period if they delay. Same thing, delay, deny, approve. Then a 90-day time period, delay, deny, approve. And then a 60-day time period, delay, and they can only deny or approve. That's why we've seen, if you've been watching on Twitter, why we see all these things where every time it was like, oh, it was delayed, it wasn't denied. But anytime something was denied, it always went to the 240 days you mentioned and then got denied. So if this thing gets delayed right off the bat, which would happen based on our estimates, somewhere around August 19th, August 15th, maybe, depending on when it hits that SEC website, maybe a little later, that's when the first decision deadline is going to come up. So if it gets delayed there, that's probably a bad sign that it's going to be denied. Not guaranteed, but it's that severely decreases those odds that I said at 50%. They would go way down after that point. That said, ARK and 21 shares, after they filed in May. Their 45-day deadline was June 29th. The SEC came out and delayed it 14 days early. So it's a deadline for a decision. It's not they have to wait until this day to file it. It's just a deadline that the SEC has to respond by that day. So the next date for that is August 13th. So essentially, the BlackRock decision is, unless we see it posted to the SEC website tonight, it's going to be after August 13th. Right. But again, ARK and 21 shares filed with, I think it's CBOE, and they don't have the same surveillance sharing agreement that's stated in the 19B4. I'm assuming they're probably scrambling to get one right now. Right. So we'll be watching that very closely. But essentially, look for some type of update in August at the latest. And like I said, the SEC went 14 days early on June 15th, which is ironically the same day that BlackRock filed, and delayed ARK and 21 shares. So yeah, those are the timelines. If they go delay, and then deny, we're looking at like February.
Okay. Man, James, what's some good insight and knowledge? We really appreciate you taking the time and joining us. Guys, if you want more of James, go follow him on Twitter at JSEYFF. We did put the link in the chat, and we pinned it to the top as well. He does tweet updates, and so we know the world of ETF and TradFi can be confusing. James does a great job of breaking everything down, as you saw here today. And so, James, on behalf of our community and all of us here, we appreciate you, my friend. And we definitely look forward to bringing you on again. And enjoy the rest of your weekend, man. Take care.
Thank you.
Yeah. Thanks for having me, guys. Happy Friday. Have a good weekend.
Thanks, James.
All
You
right,
too.
thank you.